All right. Just as normal, wait a few minutes to get started. Here is 4 o'clock Pacific, 7 Eastern. And just to get started here, let's why don't you chat if you're with me where you're at? What state you're in, what's going on before we get going? Take a couple minutes. Webinar, YouTube. All right, I like it. Where we at? What do we got, guys? Who's here? Chicago. All right, my hometown. I live in Schaumburg. Oh, aloha. It's like lunchtime there. New Hampshire, Colorado. All right. Schaumburg. All right, Joe, you too. I like it. I lived there back when Walter Payton was there and the Bulls. Hello, hello, Sophia. We'll wait a couple minutes to get started. I'm like, today is going to be a pretty good interactive, really good subject, actually. Georgia, Cleveland. Ooh, is it snowing yet in Cleveland? Are we still warm? Maryland. Where's it snowing? Anyone? No snow today. I feel like Cleveland, I feel like when I'm there, it gets snow one day and then it's like 70 degrees or 65 the next. There's a few states like that. Denver's like that. It'll snow and then the next day it's like shorts weather. Dayton, I lived in Dayton when I was a kid. Dad was in the Air Force. Dayton, Ohio. Oh, it is. If you don't like the weather in Cleveland, stay in higher. It'll change. I like it. That's good. All right, I'll give it one more minute. Um, Colorado, Dayton, Louisiana, Mississippi. Hello, hello, hello. All right, I think I'm gonna get started here. Um, and we'll let the last people here trickle in as we get going. Let me get this. Go back to here. Perfect. And Jose, all right. Okay. You guys can hear me okay, it sounds like. So let me share this screen and give me 1 second and get started. Can you guys see me and see the screen? Can I get a yes, a no? What do we got? I'm not seeing the chat now. I'm sharing my screen. Okay. There it is. Thank you. All right. Well, look, let's get started. Today is a topic that people ask me a ton about, and it gets a little bit analytical. So I've got a lot of questions and answers on this subject today that is probably applicable to almost everybody listening in today. We're going to talk about some specific investments, but also talk about first. We're going to take the first a little bit of time about talking about backdoor Roths, and also conversion of Roths. It's a big subject. It's a sexy subject because people are always talking about like, when should I do it? Should I do it? Does it make sense for me to do? And I hope to answer because I'm planning on today being a smaller group, and it looks like it's good. I know this is going to go out to those who don't listen, who couldn't make it. I am going to leave a lot of time open for questions and answers. So feel free if I go too fast to put a question in there. As always, I've got Claudia here with me. Claudia is going to pop in as well throughout, answer questions. She also is she's got a couple things she's going to share with us, but she will answer a few things as we go along. So, Claudia, for most of you, probably a lot of you, if your clients of ours have interface with Claudia and her team. She helps people come on board and takes all the good calls, bad calls, all the calls that maybe someone can't answer internally. And so Claudia is a ton of help, a great resource, and so she's joining me today. And I want to ask her on purpose. I want her to be on here because as we talk about this concept or this subject about conversion of Roths, or of traditional accounts to Roths, I want to hear some stats and I want her to share some numbers with me. So, as always, Horizon Trust Company, we're a passive custodian. We don't sell investments. We don't give advice on specific investments. We don't offer any legal advice or tax advice either. So, let me see here. Oops. There we go. So me, if you don't know who I am, real quick, if you've been in here before, usually about half our audience is new and half isn't, and half of our clients. I recognize a lot of names actually that came in chat. So I've done a lot of real estate and homes and self-directed. There's my crew. That is my why. That is why I'm in this. I love what I do, and I'd say everywhere I go, it's kind of hard. My elevator pitch is a bit different because I can't, just say I'm in real estate. Trying to say I teach people about self-directing is a little bit of a harder subject because then they're like, well, what is self-directing? Or frankly, when I say self-directing, most people, when I say it at first blush, don't get too excited about it. In fact, they probably a little bit like saying that I work for the IRS, I feel like, or it's an IRA and it seems boring, when I think it's absolutely the opposite of that. Because for those of you again that are new, or maybe even just a refresher on this, self-directing enables you to unlock your retirement account, invest in what you know and understand. So if you're in that boat, if you have a self-directed IRA account, or if you don't have one yet because you want to learn about it and understand the pros and cons of it, this is the place for you. The success that you have of avoiding paying taxes is just as powerful as your returns. And that's truly the case. And I've shared this with many people over and over again. We could be investing in the same things, but if I'm doing it in a vehicle where I'm avoiding taxes or deferring my taxes, I can essentially make a lot less money than you every single year, or than an individual that's not doing that, and end up with a much bigger account just because I'm using this self-directed vehicle. So I've done it for a while. I enjoy it. I really, really love teaching people how to use a self-directed IRA. This picture in here, some of you actually might even know my son. I got three of them, as you can see, but the one on the right in this picture, my older son, he is self-directing today. He's doing what we're talking about with a Roth IRA. So this is, and it's not because I forced him into it. It's also not because I think there's a lot of parents out there, and we can talk about this, by the way. Put the questions in here, and I have no problem talking about Roth IRAs for your children. Once people get the concept of Roth IRAs, they're like, oh, this is the greatest thing. I'm going to open one up for all my kids. And sure, you can do that. I'm going to talk about that. But I'll tell you right here, I didn't do that. Partly because my parents didn't do that for me, and I wanted him to want to do it on his own. And Carson has truly done it on his own. His wife there standing next to him also has a Roth account, a self-directed Roth account. And why that type of account? Well, let's kind of talk about that. So in particular, we're going to talk about the Roth conversion. This is could be technical, but it's not going to be. I'm going to break it down to make it very simple. I'm going to answer the most common questions about what a Roth conversion is, or a backdoor Roth. In fact, the backdoor Roth got a bad rep for a second. The IRS wanted to change the rules, and they proposed, there was a proposal out there, a bill, to not allow Roth conversions or a backdoor Roth. They are absolutely legal. It's permissible. And there's a reason why people are doing this every single day. As people come over to our company, they convert their traditional accounts. And so first, what is a Roth conversion? So just simply put here, a Roth conversion is the process of repositioning your assets from a traditional IRA or an eligible kind of distribution from your other employer sponsored plan. So if you have a QRP, if you work for the government, an old 401k, you can convert those traditional type of retirement accounts. They're eligible to be rolled over into a Roth IRA. Now, was there anyone here listening that was here when I interviewed Todd? I don't even know if Todd's here. I keep going back to him. He might not appreciate that I keep using Todd as a good example. Todd did just this. He is not only crushing it in his retirement account, investing and lending on personal small deals to different individuals and businesses, and he's doing it inside of his Roth. He converted his IRA to a Roth account. So why would somebody want to do that? I'm going to get into that. But first and foremost, I want to just to tell you, if you're listening here today, if you have a traditional IRA or a qualified plan from your employer, from your previous employer, that could be a QRP, could be a 401k or 403b, 457, you most likely can convert that into a Roth. And why would you want to do that? I'm starting off with a quick example right away. So this example, I think, is a very simple one. And this is based upon a traditional IRA, comparing it to a Roth IRA. Okay. So these two types of IRAs, one, if they both begin with $100,000, but let's just say if you have a traditional IRA and over 10 years at a 12% interest rate in your traditional IRA, you'll end up with having a little over $310,000. And if you were then to to distribute that account, you then most likely, well, not most likely, depending upon what tax rate you're at, I put in 30% here, you'd be paying $93,000 in taxes. The alternative to that is if you have $100,000 today and you want to convert and open up a Roth IRA, you would then have to, you'd have a $30,000 basically a payment. You've got to make a $30,000 payment to pay the taxes on that $100,000. But if you do that today at the same 10 years, at the same 12%, you'd end up having over $93,000, over $310,000 in your account, just by doing it inside of a Roth IRA. So I wanted to start with the example. Now, I'm probably going to get ahead of myself here because I'm almost certain that I have a slide on this. But I want to jump to probably one of the sexiest things, and I think one of the most important things about this example. You might be saying, well, Greg, I now have to pay $30,000. Maybe. I remember Todd talking about this, and I've also talked to a lot of other investors about this, that it really is important for you and your CPA to decide when is the right time to convert all or a portion of your traditional account to a Roth IRA. For example, if you have other real estate or other investments or any kind of depreciation or losses in a year, let's say that you think that next year you're going to have bigger losses, or let's just say, this is a good example. This year, 2023, you've had some losses that are going to affect your tax return. Now would be a perfect time to convert a portion of or all of your traditional IRA or retirement plan to a Roth IRA. Why? Because there's a good chance you can negate or eliminate or decrease that $30,000 that you might owe if you were to have to pay $30,000 on converting your retirement account. I'm going to go back to this example, but everything stems off of this example. And I again want to, and I'm going to reiterate this. Converting your retirement account, you can do a portion of or all of, and you should do it if you think probably most likely anytime. But if you're worried about paying taxes today, look at your tax return, meet with your preparer, and find out when's the right time. If this year you have some losses and some depreciation, which there very well could be, it could be the perfect time for you to convert your retirement account into a self-directed Roth IRA. I know Todd, and again, I'm going to pick on Todd. I don't know if Todd's listening. Todd did that over time. He picked and chose the years where he would convert a portion of, let's say he has $300,000 or $500,000 in his retirement account, and he was only going to have a write-off or depreciation of a certain dollar amount. He would just convert enough money in his retirement account from a traditional to a Roth, so therefore he didn't have to pay anything out of pocket because he had some depreciation in there. So this is a critical and very smart thing to do. So if you get this concept of basically understanding how a Roth works, and you think that you're going to continue to grow in your Roth account, converting your retirement account is from a traditional or old 401k or 457 into a Roth is probably the right move for you. So let's talk about, is a Roth conversion taxable? Look, it is taxable. I just explained that. A Roth conversion is taxable in the calendar year that it takes place. So if I convert it this year, I'll owe the taxes on it for this year's tax return. So yes, you and I both know that I'm going to be paying the taxes on it this year, coming up in 24, but it will be due for if I do it this year and I convert it this year, I'll be paying taxes on my 2023 tax return. So what are the benefits of a Roth conversion? The biggest benefit that I just talked about is your tax-free distributions. In that first example I gave you, when you go from the $100,000 to over $310,000, when you start taking your distributions, you take them tax-free, 100% of them. Also, what's great about them is there's no RMDs. Because there's no RMDs, if you guys are aware, at the age of 70 and a half, actually now it's 71 and a half, it continues to go up. You have to take distributions from your retirement account if you don't have a Roth account. So that is one other benefit of having a Roth account. Also, you're able to pass on these assets to your heirs tax-free. So I want to move this here. All right. What's the maximum Roth conversion per year that you can do? There is no maximum. There's no maximum conversion so you can, if you've got $1 million and you want to convert all of it, you're absolutely welcome to. Are there income limits to Roth conversions? No. This is kind of a big deal. This is why the backdoor Roth was created. So the backdoor Roth, for those of you that have not heard of a backdoor Roth typically is somebody who wants to open up a Roth account, but makes too much money. There's limitations on how much money you make to establish a Roth account from scratch. And so if you're in that boat, which many people are, if you make too much money, and Claudia, why don't you put in the notes there what that dollar amount is of the limitation of what you can make. That being said, if you make too much, then a lot of people will do a traditional or typical type of traditional self-directed IRA account with us. And after it's established, you can then convert it to a Roth and pay the taxes, if that makes sense. But there are no income limits for converting a Roth. But there are income limits, like I said, when you create a Roth IRA. So from scratch. When's the best time? It really depends on you. The best time to convert your assets depends upon your financial situation. Like I said in the beginning, this is, I think, part of the tactical or technical part of things for you to decide. I think this is where you want to meet with your CPA / bookkeeper or your accounting team and look at your return and decide, is this the year that you should convert your old 401k into a self-directed Roth? And so I'm gonna pause just for a second here. You can see on here on my screen, there's an appointment link. I'm gonna say this probably 2 or 3 times here. Claudia also will put this in the chat. But for those of you that are in that boat where you're not sure if this applies to you because you have this statement maybe from a retirement account. I can't tell you, there's probably even a lot of our current clients at Horizon Trust Company. It seems to me that they find these dangling retirement accounts, this $10,000, $20,000 or $100,000 retirement account, or this old 401k that's been sitting around, and they didn't know that they can convert it and or move it over to a self-directed IRA. If you're just not sure and you have a statement, it can be an old statement from the last year, set an appointment with me and my team. If you schedule an appointment, we'll walk you through your statement of what kind of account it is, and if it's applicable, if it can change and or convert to a Roth, or just convert to a self-directed account. It could be self-directed Roth, or it could be a self-directed IRA. Either one works. We'll help you with that. So set an appointment if you're looking to kind of understand if this applies to you. But if you're not sure if it applies to you or not, set the appointment, but most likely it does. If you have this retirement account, it most likely does. So that being said, make sure you can, yep. Everyone still hear me okay? Okay, there we go. Okay. Can I do a Roth conversion 2024? Um, the conversion must be done in the calendar year. I think I already said that, but I just want to clarify that you can't do it between January and April of this next year for the tax year of 2023. This is why we're talking about it today. You still have time. In fact, you can get it done through the end of this year, to through December 31st. So if you're in that boat and you think you want to do it and you have an account with us, or you want to move over an account with us and convert it, you have through the end of this year. We can get that done, no problem. It's very easy. We can get it done very quickly. When do they do? I think we already talked about that. Your taxes are due on the Roth conversion in that calendar tax year. So you'll get a form, tax form. When you receive that 1099-R form, we send it to you. Your CPA can help you prepare, put that in your tax return. It's a very simple thing. I think the backdoor Roth and the Roth conversion on purpose, I think people want you to feel like it's confusing, or it's absolutely not. In fact, on that subject, Claudia, I know that we open up hundreds of accounts every single month. People opening up all kinds of different self-directed IRA accounts with you. Are you with me here still, Claudia? Can I take you off the mute for a second?
Yeah, absolutely.
All right, you got your glasses on here, so you're like super serious today. So Um, no, so tell me, Claudia, in general, since almost every account that opens up with us goes through, I know your division in your office. In general, what would you say as far as, are you seeing a lot of conversions typically at the end of the year? Do you see them throughout the year? Is it about the same? When do you see the conversions happening?
Yeah, we definitely see them throughout the year as people are doing tax strategy with their CPA. So they call us and they say, "Hey, I just had a session with my CPA and they want me to go ahead and convert this much this year." So sometimes they do conversions throughout the year that way, or they wait until the end of the year to know how much their annual income is going to be. So right before December 31st, and they say, "Hey, this is what I'm going to convert so that it makes sense in my tax strategy." So it just depends on what kind of individual we're dealing with, what the net worth of the client, how much income they're using, and also for 401ks. Somebody did ask if we could do conversions for 401ks. We absolutely can. So 401ks, as everybody knows, the contribution limits are a lot higher, and you can work with your CPA to go over what your income, I mean, with what your contribution can be for the year. So at the end of the year, what we see is an influx of people meeting with their CPAs, doing tax strategies, and then telling us, "Okay, this is what I'm going to convert for my 401k, and this is what I'm going to convert for my individual retirement account." And we also open a lot of Roth accounts at that point, because a lot of people don't know that this is a strategy that they can use. So they learn from somebody like you, Greg, or somebody on the internet, or somebody tells them what the strategy is and how they can utilize it. And then they go ahead and set up the account. The conversion does have to be done before December 31st. The reason for that is because the income has to go on your December or on the end of the year. So you can't do it when you actually do your taxes next year. A lot of people think that they can wait until April, but they cannot, because your annual income has to be done in an annual basis, which is December 31st is the end of that year.
Thank you, Claudia. I think that now that I think about it, just for me, I feel like every time I meet with my CPA at least once during the year, sometimes twice. I do a call usually every quarter, but we usually do one face to face, maybe two. And it seems like I never do it in November and December for obvious reasons, right? It's
Right.
Thanksgiving, it's Christmas, it's New Year's. And so if you're like me, probably most of you are doing and have meetings planned in and most people don't do it in January. Why? Because you get most of your tax forms, mortgage, interest, all those expenses towards the end of January. And so you get them all collected and you meet February and March. That's the problem.
Yes.
And so if you're in that boat where you think this is the right year to convert some of your traditional retirement account, and set up a self-directed account with us and or convert some of it, you absolutely should. So don't wait. And it should be actually, this could be a quick 5-minute conversation with your advisor, your CPA, and say, hey, look, quick call. I wanted to ask you about this, or send them an email. I heard about this, backdoor Roths, or the conversion of to a Roth. Here's what I'm thinking. I'm going to have some losses, or I'm going to have some depreciation. What do you think? And just ask them, because most likely it might make sense for you to do that. So ask now, do a quick 5-minute, convert some of it with us. And then when you meet with them next quarter, you can kind of dive deeper into to see if you should convert more of it or not. So that's a really good thought. Thanks, Claudia. So and stay with me, Clark. So I'm going to ask you probably more questions here. And what was that income? Were you able to look up that income level? I feel like it's changed a little
Yes.
bit.
I put it in there. So because we are doing 2023 right now, the income limit is 153 for individuals and 228,000 for jointly. So if you're married, it's 228. It is going to change slightly for 2024, but that doesn't apply for this. But I can look it up and I can put it up as well. It changed. I think it went up a little bit.
Yeah, it usually goes up. That's why I feel like every year it goes up a couple $1,000. But I share that with you that this is one of the perks of the conversion, is it doesn't matter how much money you make. If you're making more money than that right now, you can convert all or a portion of your retirement account into a Roth account with us. So thank you. All right. So can I do a Roth conversion? If I'm an RMD age and retired, yes, but it'll still count. It will not count as an RMD. So the RMD will still have to be taken. So if this year you had a traditional account and you're converting it, this year you still would have had to do your RMD. But next year you would not have to do your RMD. So for those of you that are over 71 listening, love it. And that means you're still active and crushing it in the retirement world. So there's something called the 5-year clock. Do Roth conversions start a new 5-year clock? So there's a lot of words here. Let me explain this here. So once you convert, so if you are listening to this and you have a retirement account and you plan on taking out a large chunk or portions of your retirement account, and you're over the age of 59 and a half, and you plan on taking money out in the next few years, then the conversion might not be for you. I think that is one, if you want to say, I wouldn't even say it's a negative, but this is just one real life example where it might not be applicable to you. Why? Because of this 5-year clock. Once you convert the portion of money, all of it or a portion that you convert to a Roth, there's a 5-year clock, and where you can't take out those assets, those funds, and take as a contribution. Now, but you can obviously, as a distribution, as a distribution to yourself. But you can be investing those funds. You can move that money from a Roth account, self-directed Roth account, into different assets and be investing it and compounding it. That you can be doing. So if you're in that boat where you think you're going to be taking monies out in the next 5 years, whatever dollar amounts you think you'll be taking out, you should leave in your traditional retirement account. It can be a traditional self-directed account, so that's no problem. But you would not move monies into a converted Roth and then take distributions out. So that's what the 5-year clock is. And so can you undo a Roth conversion? Typically not. There's a couple ways of doing it, but it's not. It's very difficult. So there's no undoing the Roth conversion. So I'm gonna jump into, on purpose, I wanted to make this 30-minute on the IRA kind of backdoor conversions and Roth conversions. Just to ask some questions and kind of talk about a couple different specific investments I've seen people using in a Roth and why it's so powerful. That's one of the things we talked about, is talking about people who've 2 times their investment. How are they doubling their returns and getting 100% rate of return? So I want to talk about that. And so while I'm doing that, feel free, if there's some things that maybe I didn't answer, I'm going to try to answer them here. And so definitely put them down in the question and answer. Also, like I said, here's the QR code if you want to set an appointment with us and our team. This is my email. You can email me directly, Greg Herlean at horizontrust.com. I would love to answer any questions that are specific to you. For example, things that I get all the time are like, hey, my son is this age, I'm this age, I'm not going to use all my money. What are some ways to transfer it to them without paying, so they're not having to pay as many taxes? I'd rather be talking about how you don't pay more taxes. My kids sometimes think, hey, Dad, when well, not sometimes. Once my kid at dinner table was like, so Dad, when you die, how much do I get? And I'm like, nothing. Like, that's not the goal. The goal for me is for me to grow my account and do it in a compounded way, avoiding paying taxes, or deferring my taxes. For me, I like to avoid them altogether. I've converted most of my money into a Roth. My Roth account can grow. And when I go to take distributions out, when I'm over 59 and a half, I'll take all of those distributions out, and not pay any taxes at all. So if you're in that boat and you want to be doing that, set an appointment or shoot me an email, ask me questions. Would love to answer any questions you've got about that and how that applies to you. So that being said, there's a couple things that I've seen in particular, and Claudia, I'd love you to share maybe one or two that you've seen as well. But for me, the things that I've seen recently are syndications, meaning a partnership in a real estate deal. I've seen people come, and so they're looking for equity. So let's say they need they're buying a home, and they're getting debt for $200,000, and they need $50,000. And so they need $50,000. They're borrowing $200,000, and I'm sorry, yeah, borrowing from a bank $200,000, and they're going to flip the asset. They're going to flip it because the interest rates at this time are a little higher. So he doesn't want to hold it with the higher interest rates on the $200,000. So they've asked, and I've done deals like this personally, me, and in this case others, to put $25,000 or $50,000 up out of the retirement account and lend it to them, and or be a partner. And that's up for them to decide, or for you to negotiate with them. But let's just say you become a partner, and so your IRA puts up $25,000 to $50,000 of the equity needed. In the terms, let's say that for putting up that money is you get 50% of the profits when you flip the deal, or maybe you put up $25,000 and get 50% of the profits. Most likely, when you put up $50,000 from your IRA and you end up with 50% of the deal because you put up 100% of the equity, which is not a terrible deal, that deal would flip in 3 to 6 months. Let's just say it flips in 6 months, and there's a $50,000 profit. That $50,000 profit, your IRA, if it was my IRA, would get $25,000 of that profit. You pay off the bank loan when you flip it. I get back my equity. My IRA gets back the $50,000, and then I get $25,000, or half of the profit. So my $50,000 just turned into $75,000 in a 3 to 6 month period. That's a 50% rate of return on a flip. Why do I mention flip? Because right now I see more IRA investors lending and flipping than ever. Flipping has gone up way more because people are buying these investment properties and not wanting to hold them because the interest carry is very high. So in that case scenario, if I did that deal twice, 2 times, and getting a $25,000 profit, I can turn my $50,000 Roth retirement account, self-directed account, into $100,000, doubling my money, $50,000 to $100,000 in my Roth, not paying taxes. Is that possible? Absolutely. It's happening all day, all over the place. And is that what I'm doing in my retirement account every time? No. I'm doing that sometimes. Those deals come and go. They're not always there. In fact, people are like, why don't you just do those deals? Because they're not just there all the time. A lot of the deals I'm doing, I'm lending. I'm maybe earning 1 or 2% per month. Still really good. 12 to 24% of my money. If you happen to be in the stock market, right? You're most likely breaking even, maybe making 10%, maybe losing 10%. But if you're in the stock market and you're only making 5%, and you all of a sudden go from 5 to 10 or 15 or 20%, do the math. You can throw it in our little calculator, HTC calculator, and you can see how quickly, exponentially, your account grows from $50,000 to $250,000 just by deferring your taxes or not paying taxes if it's in a Roth IRA and investing in something you know and understand. I'm seeing a lot of that. So that's one example. Claudia, you want to share? Is there something that comes to mind that maybe you've seen a client of ours doing that you saw?
Well, I see a lot of people waiting until they find a deal. Maybe they find a syndication deal that they are interested in, and then converting only that amount that they want to invest in. So at that point, they pay taxes on $15,000 for the year, and they're growing that by 12, 14, 18%, whatever the interest rate is for the deal. So they don't actually do the conversion. They don't do a full conversion. They just convert a little at a time so that they're not paying a bunch of taxes all at once, and they can still take advantage of the growth tax free. So I see that a lot of our clients are doing that this year. So I think we've gotten a lot of training and just really work with compliance to make sure that we're guiding our clients correctly, and also letting them know that they have to work with their CPA so that they can be strategic about how much they're transferring over, and they're using it to their advantage. So I think it's going really well. We have a lot of really good questions on the chat if you wanted to go ahead and
Yeah, let's
answer
let's
some
let's
of
jump on
these.
some of
Yeah.
let's jump on that. And I that's a great example I did not give, but Claudia just gave. I just want to make sure you guys heard that. Like if you have a retirement account and you roll it over to us and self-directed with us, and you're like, hey, look, I want to, most of the money is going to be lending, but there's going to be a couple deals where I'm going to double up. I'm going to go from 5 to 10 or 10 to 20. Convert that amount. Convert the $5,000 to a Roth. That absolutely makes sense. And that's a great example. So go ahead. Yeah, let's hit some of the questions, Claudia.
Yeah. So I have so somebody's asking Roth information for their kids. How old do you have an age limit for kids to set up Roth accounts? They've heard about Roth accounts. They want to go ahead and maximize that as soon as possible. So tell us a little bit about how Roth accounts work for kids.
Great. So look, first, Roths are after tax money, which means a child needs to be paid something, needs to earn money for doing something, right? So that's also one of the factors. The child needs to be doing something. Now that's very, very vague. And yes, it can be going in like whatever the job is, and they're getting paid for, but they get paid. They then need to pay taxes on that $5,000. Now they can pay that at the end of the year. You don't have to like set up a whole payroll thing where you're paying, every single 2 weeks, but your CPA can help you with this. And so if your child, and there is no age on this, but if your child is making money and paying taxes on money, and let's say on $5,000 per year, makes $5,000, pays taxes on it, then they can contribute $5,000 into a Roth account. That's how it works. So do clients, do clients of mine, entrepreneurs of mine that I know set up businesses, LLCs, and then pay their kids, and then their kids have Roth IRAs? Absolutely. Happens all the time.
Yes, yes, definitely work that. Should I still convert to Roth IRA when I'm approaching 59 and a half? You kind of went over this a little bit. It depends on what your plan is for distributions. So
Yeah,
if you want to,
that's really the answer. Yeah. So if you plan
mhm.
on taking, like, let's just say you have $100,000 in your retirement account right now, and you think over the next 5 years you're not going to take any money from it. You're going to let it keep growing. You're going to be investing it. Then the answer is yes. A Roth makes sense. If you think that, and obviously, a preface, you can always talk to your CPA, but most likely the answer is yes. But if you think that you're going to, let's say, take over the next 5 years, $50,000 out, $10,000 per year, leave $50,000 in your traditional account, and then you can open up a Roth with us and move $50,000 into a Roth account and let it grow and compound. We have a lot of clients that have two accounts, that have both a traditional type of account, which could be traditional IRA or simple or SEP, and a lot of clients that have a Roth account. So yeah, good
Yep.
question.
So can you use Roth account to do business lending? Um,
Yeah, absolutely.
yeah,
Yeah. I mean, self-directing in general, be it a Roth or a traditional account, you can lend to businesses. I've lent and partnered with my self-directed IRA to other businesses and partnered in other businesses. So that, I mean, look, that's the whole, Peter Thiel story. Many of you I've shared before. Maybe if you're first to listen to this, Peter Thiel did $5,000 in his Roth. Well, didn't he had $5,000 in his Roth, and he contributed his equity in PayPal when he first started PayPal with others. And so that was a business. Now, $5,000 when he sold that equity was hundreds of millions. Paid no taxes on that, and then just put it into and paid back into his Roth, and then from there, his Roth invested in more money. So I mean, in more deals, and so you can absolutely do that. Invest in businesses.
Okay, perfect. I have James here that is asking, I have a solo case set up with Horizon. Would it help me tax-wise to do a backdoor Roth?
Again, this probably goes back to scheduling a quick consultation in 10 minutes. We can talk about it. The general answer is going to be yes, because unless you plan on taking money out in the next 5 to 6, 7 years. If not, then it probably makes sense. But number two, the question more is going to come back to, is it the right time? Is this the year to do it? I'm seeing that this has been a year where people have taken some more depreciation and losses more than prior years. So that's going to be one of those things where you're probably going to ask your CPA, but I would do a quick phone call with CPA. Hey, do I have some losses? Do I have enough losses to convert? Because the right time to convert money. In fact, let's just say he says, oh, you know what? You got like $10,000 or $20,000 in losses that you can use to offset the Roth conversion. If that's the case, that's the answer, then he'll tell you how much of your retirement money that you can convert into a Roth. So it most likely will make sense. The dollar amount will depend upon kind of what your tax situation is this year.
Absolutely. And how much you're thinking you're going to be making in 10 years or, 15 years when you're doing distributions. Is it going to be less or more than what you're making right now? So that's why it's so important to work with your CPA and make sure that you're like, hey, what is the best strategy for me? So that is so I have Jordy here that wants to know if he has a rental property, is there a way to convert it? We get this question a lot as well. Do you want me to
The
go
answer
over
is,
it?
yeah, go ahead. We'll go.
Yes.
I'll let you do it. Yep, go ahead.
Yeah. Yeah. So the answer is yes, we can do conversion of assets. We would have to have a fair market value, an appraisal basically on the property. We can either do a full conversion of the property or we can do a partial conversion of the property. So you would just have to let us know how much it's worth. We would have to do paperwork, and then our asset maintenance team would go ahead and get that converted for you.
Yeah, I would not. Yeah, I mean, again, if you got an asset, I didn't go over that. That's a great question. Is if it's not in cash and you already have the money invested in a piece of real estate or in a business or in some kind of asset, you can still convert. You have to do a valuation on that asset. The value is of that real estate, that rental, and then if you want to convert it, then you'd pay the taxes on that valuation. So yeah.
Yep. And we do have people do that. I had somebody ask me that today, actually.
Yeah.
So somebody is asking for your slide on the $80,000 difference. What is the difference between both of them? Do you want to go over how you made $80,000 in those in that example?
The first one, is that what I'm
Yes,
at?
yeah, the one where we pay the taxes at the beginning.
Can you still see my
Yes,
my computer? Perfect. Can you see the slide?
yes.
Actually, no, I'll just if you can see the slide here, I'll just focus on that. So you can see here in this example that an individual who, if we both each have $100,000, and I want to, and I'm investing in my traditional IRA over 10 years at 12%, I'd end up with $310,000. If I were to then, let's just say, cash that out, say I wanted to cash it out, I'd have to pay taxes. And I just put 30%. Could be higher than that, right? Could be a little lower, but most likely it's going to be there or more. I would end up netting $217,000. The example I'm giving you here is if you were to pay $30,000, or if you have enough tax write-offs, probably not paying all that full $30,000, but convert $100,000 into a Roth and at the same rate, that same $310,000, when you pull it out, you'd get all of it. And so that's that $90,000 difference, basically. That $90,000 difference, 93,000. Is that what it is? 93,000. the math, or 83,000. 10, so 93,000. So that $93,000 difference is based upon of doing the conversion now and paying the $30,000 now. So yeah, that's how it works. It does make sense in most cases for individuals to do that. And again, I can't reiterate enough the importance of doing a portion of or all of based upon the right tax year. And most likely, if you're listening right now, you probably have some good opportunities for depreciation or write-offs that might be occurring this year. So therefore, you need to do a tax return. I mean, you need to do a Roth conversion now before the end of the year. That way you can get those benefits and allocate it against those write-offs and depreciation, et cetera, for this year when you go to submit your tax return next year in 2024 in April, or if you extend in October. So, yeah.
Yeah, some people do confuse the conversion with contribution, because contributions, you do have until April or whenever you're doing your taxes to make the contribution for the year before. Conversions have to be by the end of the year. So that's why we're doing this webinar, making sure that everybody understands that. I have James that is asking, if you only do contributions instead of conversions, does the 5-year rule apply? The answer is yes, it does. Anytime that you set up a Roth IRA, the 5-year rule will start. So that's for every Roth. It doesn't matter if it's conversion or if it is a new account.
That's right.
Okay, so Lloyd is asking, in your example, can the $30,000 be paid from your traditional IRA when converting it to a Roth IRA?
Say that one more time.
In your example, can the $30,000 be paid from the traditional IRA when converting it to a Roth IRA? The answer is yes.
Yes, a lot of people do that as well. Yep.
Yeah, and what you would do is you would just let us know, or whatever custodian you're choosing to do this with. Hopefully you choose us, but you would just let us know that you want to go ahead and take it out of the account, and we would take it out at the time that we do the conversion. Our asset maintenance team will go ahead and just take the funds out. Maya, she said, my question 2, please. Let me see. I don't see your question. Can you write it down again? Yeah, I'm so sorry. Alicia, if you see it, she's in the background too. I don't see a question from Maya, but I do want to answer it. So if you want to go ahead and tell me what the question is, I'll go ahead and put it. Maya, okay, I see it. If I maxed out for my 401k, if I max out my 401k, say my W-2 is 80 and I contribute 20K to my 401k, will my income be considered 60K or 80K for the purpose of calculating cost of a Roth conversion? Do you want me to go say it again?
Well, if you've got just the first part of it, if you contribute a 401k, oh, okay. So Maya, correct?
Yes.
The taxes that you'll pay is based upon it will affect. You can't. I see what you're saying, Myra, and try and do like that's very creative. Where you're like, okay, I'm going to do a 401k, bring my $80,000 income to $60,000. Then I'm going to convert my $20,000. I believe that's what you're saying, into a Roth. That $20,000. Yes, would end up going back into your 60s. So you'd be right back where you started at $80,000. So that would not give you the benefit. Most likely, the most, that example could be a little bit done differently, where you do that this year. So you get the tax benefits today by putting max contributing to your 401k. So now you only pay taxes on $60,000. Next year, depending upon what different write-offs and taxes, et cetera, that you might have, then you might convert it. But you don't get to that. That would be a very clever way of kind of getting through and not paying the tax on the 20,000, then converting it. That'd be like the super backdoor Roth conversion ever. So creative, I like it. No, but that would be, and that's why it's important actually in understanding and talking to your CPA about the conversion, because if you convert, it actually could hurt you if you don't do it at the right time. As far as that, that's one other thing I could have brought up, and also why I say talk to your CPA. It could jump you into the next tax bracket, and so typically it doesn't very often, but it definitely could. And that's why we keep talking about the importance of converting at the right time and converting just a portion. We have clients that open up the Roth account and then convert every single year, different dollar amounts. You might convert 50,000 this year, 30,000 next year, but slowly they convert all of their. That's what Todd did. Todd had this big retirement account, and after like 7, I think, or 8 years, he slowly started converting it based upon how much a CPA told him to convert, and so that would make the most sense.
Absolutely. Okay. Rev here is asking, how would conversion happen with a crypto IRA where assists are all in crypto? How would the taxes have to be handled? Would the assets need to be sold or not? That's a great question.
I don't know that I've had any clients, Claudia, you correct me if I'm wrong, convert their crypto asset. But the answer is we know that you can convert your retirement account even if it's owning a different asset, be it a business or be it crypto. I've not seen anything where it says you cannot convert an asset even though it's owned in crypto. You just have to do it based upon the valuation of the crypto. That's why, again, it could make sense to convert when your Bitcoin is low. This could be the perfect time to do it, especially if you think it's going to go up. So
Yes.
absolutely, that would be a very strategic way and timing. Just
Yes.
like I said with the guy like Peter Thiel with PayPal, he knew it was going to go through the roof, or at least assumed it. So buying in at a Roth at pennies on the dollar, now turning into whatever is the smart move. Absolutely, great question.
To add to that, if you bought when it was really high and now your account is a little low because of because it went down in value, but it'll go up sometime, you can convert now and you would pay less in taxes than you would when it actually is up. So you can make all that back up in gains in your Roth IRA. So I've seen that, and it definitely is just an asset. Any asset in your self-directed IRA, you can convert into Roth IRAs. So whether it be precious metals, a property, a syndication deal, we've recharacterized syndication deals from traditional to Roth IRAs because they figure that they can go ahead and make more from the traditional to the Roth IRA in by avoiding the taxes or paying taxes now. So any asset in that account can go ahead and be converted. Perfect. This might be an entirely different subject, but can an annuity be converted into any sort of self-directed account? 401k perhaps, or anything else that I might be able to do with an annuity?
Depends. I mean, if is your annuity non-IRA money, non-qualified, or is it IRA money? Um, if you can answer that for me, that could help me answer the question. If it's non-qualified, um, then most likely you want to leave it there because you can't convert that whole lump sum of a non-qualified annuity where you are getting tax advantages, even though this let me give you the longer answer and answer on this is I like to base your decision not only based upon tax return or taxes, but also your interest rate. So I know what annuities pay. They happen to be paying pretty good right now. Annuities in general do a bit less, better than the stock market lately, but a lot less than real estate. So if you were to take your annuity that you got, and maybe it's a fixed annuity, I don't know what kind of annuity you have, and look at what it's been averaging the last 5 or 10 years. Let's say it's averaging 6 or 7%. Put that in our compounding interest calculator. And if you were to see that you were able to put that same amount of money and earn 10 or 12%, potentially in different opportunities in real estate or whatever it might be, and compound 10 or 12% instead of 7 or 8% that you might be doing in your annuity, it is a huge difference. So it might make sense for you actually to, if it's a non-qualified annuity, to convert and to open up a traditional or a Roth account with us if you know where you're going to invest it. That answer though is going to be based upon, you can email me, we can set up a call with me or Claudia or my team, and we can talk about kind of the pros and cons. So So yeah.
Yeah. Perfect. Do you guys have any other questions? I have a couple that are kind of the same that we've already gone over, so I don't want to be redundant because they were kind of placed about 20 minutes ago and we already went over them. So if there are no more questions.
We'll wrap it up. All right.
We have one question. Can the conversion be completed if funds from a self-directed account is out working, or does the funds have to be in the account when completing the conversion?
It can be out
Oh,
working.
that would be the asset. Yeah.
Yeah.
That would be an
It'd be in
asset.
the asset. Yeah.
Mhm.
Yeah.
Yeah,
So,
so great questions.
good. Yeah, go ahead, Claudia. You have something else?
Yeah, obviously everybody has their own situation. It would be something that we would want you to talk to an IRA specialist here at Horizon Trust, which is why we want you to schedule a call to go over your specific situation. It's something that we do a lot of in the month of December. We're actually like booked out days in advance because it's a hot subject. You only have till the 31st of December to do it. So we want to answer any questions and have you meet with your CPA before we actually do anything and have you be in the best strategy possible. So book a call with one of our team members and we'll be able to answer any specific questions. Because even though like we say, yes, you can, yes, you can, yes, you can, no, you can't, there are specific situations where we can go ahead and go over your specific scenario and come up with the best strategy for you.
Yep, that's all I was going to say. You said it perfectly. So thanks for joining us tonight. And thanks for all the questions. Great questions. Hopefully this was a great topic. Hopefully it was something that you guys all learned something new. Again, if you don't have a self-directed IRA, you should have one. Set an appointment, shoot me an email, ask us any questions. If you have a statement, we can look at it, we can explain it to you and see if your kind of an account would qualify for a conversion and or for a self-directed IRA. We love our clients. We love all of our future clients. Definitely set an appointment with us. And thanks for spending time with us this afternoon or this evening. Thanks.
Thanks, Greg.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.